Welcome to episode 2 of Making Sense of Wealth. My name is Andrew Whalen. I am the CEO and wealth advisor of Whalen Financial, a personal CFO company dedicated to providing retirement and wealth management solutions to the end consumer. This program is focused on breaking down complex financial topics in user-friendly formats to help better understand kind of the world of Wall Street and what we do as financial advisors on a daily basis. It's just me today, just solo, hoping next week we have a guest on. But today I wanted to talk about a hot topic, which was unicorns. And not the mystical creatures. So unicorns, by definition, with regards to initial public offerings. So unicorns can be defined as privately held businesses that carry a valuation greater than $1 billion. So most of you are familiar with unicorns that have IPO'd or listed on the stock exchange this year, whether that's companies in the ride-sharing sector, the plant-based alternative meat sector, the social media or health fitness sector. You should at least be familiar with one of them, if not all of them. But those are unicorns, companies that trade at a valuation of greater than $1 billion. But the point of today is really to discuss the hype of it. It seems like almost on a daily basis we've got a client calling in asking about a specific stock or a specific sector that's related to the hot IPO market that we've really had this year with regards to Silicon Valley startups. Now, the big question is will these companies eventually live up to the hype? Will they become profitable? Will they deliver rates of returns that investors are used to seeing, both either on the private side of owning them prior to going public, or on the public side if they compare them to their competitors in the already publicly traded space? So if you don't know how some of these unicorns got started, essentially it all starts with an idea. And this idea becomes a product or a service that typically a venture capital firm, a VC firm, will invest to grow top-line revenue. And if you don't know what top-line revenue is, that's essentially sales. And what they're trying to do is get more and more market penetration in their service or product. But the problem is that even though the problem is that every customer that they acquire costs more and more money. So essentially, you're never really going to be able to dig yourself out of that unprofitable hole unless you can do something wildly creative with the expenses, which is really interesting to me. It didn't really matter much to anybody that these companies weren't profitable until Wall Street decided that they cared. And if you've seen some of these recent IPOs this year, whether that be in the ride-sharing sector or the technology sector, that there may be some red on your client statement or on your investor statement at the brokerage firm that you own if you took the risk and purchased some of these at the IPO dates. But what I wanted to focus on today is the hype, and that these companies really need to prove themselves before they pique any of my interest. And the reason is there's a huge difference between a great idea and a profitable business. And the big difference is that keyword of profit. But they have to go through these different cycles. And I'm not saying that there aren't companies out there that aren't profitable or hadn't been profitable for a long time that ended up being successes. What I'm saying is that Wall Street definitely cares today. And the problem is that these VC firms who have pumped a tremendous amount of money into these assets, when they list, they get to unload those shares. So typically the owners get wealthy, the VC firms get wealthy, the brokerage firms make money on their filing fees and listing fees, and then the end retail or the end retail client is left holding the bag. So I just think it's very important that these companies have to prove themselves to not only Wall Street, but also the end consumer, because we use them so often. I mean, I can't imagine on a weekend here in Las Vegas what it would be like not having an Uber available or a ride-sharing service available. Sorry about that. If I had to, take a taxi like what we used to. So they've got to prove themselves, find a path to profitability. But most important, there has to be a tremendous amount of investor education that has to go along with investing in these IPOs or these unicorn companies. So typically, every company that does an initial public offering will go on a roadshow with a pitch deck that talks about their path to profitability. And some or most of them say that there is no path to profitability in the near term, so you have to understand that. But there's also big differences between a IPO and a direct listing, where they just list directly onto the exchange. And you want to work with someone that has the ability to go through some of those pitch decks with you. Most brokerage firms offer a limited amount of IPO shares to the general public, so most retail clients will end up getting these shares after they list or when first day of trading begins. But what you'll want to do is really remove the emotions from anything that you do like or you don't like, and definitely don't chase the hype. As the IPO market has really shown this year, the hype really isn't real. And that's evident of performance of some of the individual sectors or some of the individual stocks that are associated with that unicorn tagline. But the difference between a great idea and a profitable business, I think, is the most important key when looking at some of these unicorns. Just because they're downloaded on our phone or just because we use them on a daily basis does not make that company a profitable business. And that is definitely evident of the office sharing company that starts with a W, ends with a work. They failed their IPO listing, and I think it was announced today that SoftBank is going to end up purchasing a large majority of their private shares. I mean, that went from $47 billion to $8 billion. I mean, that's pretty drastic, and it's because Wall Street finally figured out that they want you to be able to show a profit in order for them to reward you. So just because we use these apps on a daily basis or pin our ideas on their board doesn't mean that they are a profitable company. And that's not always a bad thing. Remember, the king of online retail spent many years in the 2000s not showing a single profit, investing their capital to acquire more and more customers. And eventually, over time, Wall Street rewarded them. So I just want to remind everybody that obviously, investing is for the long term. The person who wants to get rich quick usually stays poor forever. So remember, when you're analyzing some of these unicorn IPOs or unicorn stocks in general, make sure that you're not overly looking into the hype of the product or the service. You have to be able to disconnect that from your overall investment thesis. So working with someone like Whalen Financial, we can help dig through those numbers and look through those research reports and pitch decks to help make a better informed decision. Just remember, when you're investing in equities, it's generally always for the long term. So make sure that these profiles of these companies that you're investing in fit with your time horizon, your liquidity needs of how soon you may need the money, and definitely the risk tolerance that you're willing to swallow over the time period that you're going to own those investments. But yeah, I think that the unicorn really may have seen its brightest day, which was probably 2018, prior to the onslaught of IPOs so far this year. Only history will be able to tell, but just make sure you remove the emotions of chasing those unicorn types of investments from your investment behavior when selecting these individual positions or sectors, whether that's ride sharing, alternative plant-based meats, different social or athletic unicorns that have come out of Silicon Valley and listed recently this year. But we look forward. We just wanted to do a short one today for making sense of wealth. Remember, if it don't make dollars, it don't make sense. We look forward to talking to you soon again. Again, my name is Andrew Whalen. I'm the CEO and Wealth Advisor of Whalen Financial. If you have any questions, you give us a call, 866-600-3030. We're always happy to help you. Have a nice day.